Hey, it's Chris with Life 180, and for this video, I want to talk to you about how you cannot lose with life insurance. Now, I know that's kind of a cliche, cheesy kind of intro, but it's true. Here's the bottom line. I always kind of talk about whole life insurance, and people know, if you've been watching my video, you know that I am a big believer in life insurance being a tier 1 foundational asset in our lives. Now, why do I call it a tier 1 foundational asset? Well, the reason I call it a tier 1 foundational asset is because banks and corporations utilize life insurance, or they're allowed to include cash value in their life insurance policies that they have as key man insurance, as executive bonus insurance, or they use it in pension planning for their executives and leaders in their corporation, and they're able to use those balances as what they call a tier 1 asset. Now, what does that mean? That means that is an asset that you can leverage, that you can borrow against, that you can create as revenue, or in a bank situation, they're able to leverage that as collateralization, in the sense that for every deposit that you have, for every dollar on deposit that you have, you can lend let's say 100 times that amount, and that amount kind of varies based on the reserve requirements. But for the most part, let's say 10 to 100 times the bank can lend compared to what they have on deposit, right? So a tier 1 asset, a bank, if they're using cash value life insurance, which a lot of them do, almost every bank does it, and a lot of these banks have huge percentages of their balance sheet as far as their tier 1 assets, cash reserves, they have it in permanent life insurance. And so one of the biggest things that I want to talk to you about, and I want to show this a little bit and talk about the principles. I'm not sure, a lot of people ask me all the time, like, is your money guaranteed with a life insurance company? Well, it's based on the good faith and investment ability of the insurance company. So whole life insurance has a guarantee that goes with it. And I do want to say it's whole life, not index universal life. If you just look at the history of that and why I think that's the case, whole life insurance has been around since the 1850s. It's survived the Civil War, it's survived the Great Depression, it's survived World War I, World War II, the Korean War, Vietnam, the crash in 1980, the crash in 1987, the dot-com bubble, the Great Recession, and what's coming up, it's gonna survive that too, because insurance companies are the masters at risk management. They're the masters at managing money and making sure that you manage the risk appropriately. So right now we live in an environment where it's hard to get good returns in the fixed environment because interest rates are so low. I know that stinks, but the bottom line is nobody is going to be able to outperform a life insurance company, period. And because a life insurance company operates outside of the fractional reserve banking system, they have to be much more conservative. They manage that risk, and all of your dollars are always going to be held safe. They're not being leveraged. Think about it. In 2008, all of these banks that got bailed out, all these investment firms that got bailed out, they're the companies that we trust to manage our wealth. Like, for the most of the part, not me, but for most of Americans, those are the companies that you trust to invest your money with, to save for your future, to invest in your future. And those are the companies that are so bad at managing it that they lose it all and they have to get bailed out. All the while, you actually lose 30-40% of your portfolio in the process, and you have to build it back up. And so, that to me just ticks me off. And at the end of the day, what I wanted to do here is just kind of show you that since 2000, take a look at this. How many banks have been here? And I was looking at this. There were 561 bank failures from 2001 to 2021. 561 bank failures. And you can look at it year by year, the amount of assets, the amount of banks that failed, and it is absolutely disgusting, that number and how that works. And granted we have the FDIC and all that stuff, but that just goes to show you that the banking system is broken. If banks are able to take our money, right? If banks are able to take our money and leverage it and put themselves at risk, which then in turn puts you at risk, right? Because I know that the FDIC is there, but that's only up to $250,000 for most accounts. And so that puts you at risk if you have any kind of wealth, period. It just does. And so the bottom line is, when no insurance company, literally not one mutually held life insurance company, has failed during the Civil War, during the Great Depression, during the dot-com bubble, during the Great Recession, what's going on. And that's why I don't believe one of those insurance companies is going to fail now. Not one reputable life insurance company has failed. And so this is one of the reasons that I'm a big believer in whole life being a tier 1 foundational asset. This is another reason that I just believe we need to save before we invest. And the idea of utilizing a whole life policy as an alternative to a savings account, right? Not saving your money with banks, but by creating your own banking system, by utilizing an and asset, which is a whole life policy where you save and store your money and you grow it at a rate that's going to be 25 to 30 times what you can get in a savings account right now. And I encourage everybody to think about the fact that we need to start saving before we invest. And I know there are a lot of people that believe in IULs. And everybody knows, if you've watched my content, you know how I feel about IULs. But if you decide you want to do an IUL, I would still encourage you to think about the fact that an IUL is not a savings vehicle. It is an investment vehicle because it comes with an inherent amount of risk. And you need to be saving before you invest, right? Like, that is really important to understand. Life insurance, whole life insurance, is a tier 1 foundational asset. IUL is not. None of these banks that use IUL, you can't count IUL as a tier 1 leverageable asset as a bank or a corporation. There are other institutions where they will lend you money and give you lines of credit based on the cash value in your policy. I'm going to be doing some videos on that. Those companies will lend you money and give you lines of credit based on the value of your whole life policy. They will not do it based on your index universal life policy, because the fact is, the people who do this banking stuff, the people who run the numbers and are actuaries, they understand the risk associated and affiliated with your index universal life policy, and they don't want to take that on. They don't want to let you leverage against it. And that's why. And so, this video is real simple. It's real short, but I just wanted to kind of put it out there that, life insurance is a tier 1 foundational asset. It's something that you should really take a look at. You should really consider if you are looking to save money, or if you have savings in a savings account, in a checking account, and if you're one of those people, or a CD, and you have money sitting there, I would encourage you to really think about what are you doing with that money. Because listen, I believe we are coming up into some really nasty times right now, really nasty. And making sure that your money is in a safe place, that you're gonna be able to put your money into a system that puts you in a position where you're gonna be able to have control over your money, to be able to be positioned for emergency and opportunity, is more important now than ever. So I really encourage you to take a look at what you have, whether it's savings or checkings or CDs or any kind of fixed account. One of the challenges with some of those accounts is you either have to deal with liquidity, which gives you very minimal returns, or you have to deal with marginal returns in like a CD where you have a lack of liquidity, right? And so either of those is really bad. The beautiful part is when you structure a whole life policy properly, it can supplant your savings account, and you don't have to lose a lot of liquidity of that money to be able to do so. Yes, there's a short-term liquidity gap where you're not gonna have everything that you put into it, but you can really make it super efficient. And ultimately what you're doing is you're investing in a system that's gonna help you compound the potential growth of your wealth potential throughout your life, throughout your career, and so on and so forth. And it's gonna get your dollars performing more than one objective for you, and it's gonna help you get more done and leverage an asset to accomplish more and get you closer to the result that you're looking to accomplish in your life. That's really what it comes down to. So once again, that is just whole life. That's not index universal life. And if you have any questions about that at all, just reach out to me. I'm happy to talk to you, happy to have a conversation. I'll have a link below. You can get on the phone, have a call. If you have any questions about any of these fixed assets or whatever, I can connect you with somebody in my network that's amazing, that will be able to help you, that I've trained and mentored and coached, and kind of go from there. But if you have any questions, just leave a comment below. I will connect with you. If you found value in this video, hit that like button. I really appreciate it. If you haven't already, make sure you hit the subscribe button. Click the bell. That way you get notified every single time I launch a new video. And I'll see you on the next video. Take care.